trusted business news brand, 23 years and counting.
Economics.
It gives a pulse check on the markets.
Pharmaceuticals and healthcare.
Autos.
Steel and cement.
Grow your portfolio.
Commodities.
FMCG is life.
Technology and telecom.
Startups.
Geopolitics that impacts your life.
Green economy.
Banking.
Mergers and acquisitions and deals.
Decoding law and courtroom action.
Finer details about the mega trade pact.
Retail.
Politics.
Insurance.
All about mutual funds. Monetary policy.
Dealing room.
Well, it's a landmark day for all of us at CNBC-TV18. The channel turns 23 today. We would like to take the opportunity to thank you, the viewers, for continued support and keeping the faith in CNBC-TV18 all through these years.
And the party will go on all through the day as we continue to bring you the biggest and the brightest minds in business. But for now, let's get you a recap, or should we say a highlight reel of the best moments of our special day. All right, but first up, let's talk markets, right? We had the RBI monetary policy. Amidst all that celebration, that highlight reel, I almost forgot that today was a very important day.
There were also some unimportant things, right? Like the RBI policy and the birthday. I'm just kidding. But, it was an important day, and the market did well. Weathering the RBI policy, which was at the margin maybe a little bit more hawkish, but towards the end there was some selling pressure which did come through. Let me just quickly take you through that. So that's the Nifty for you. We ended about 80 points lower. That's about a 0.4% cut. Banks did a little better. I mean, banks Nifty sold off, but not quite as much as what the Nifty did in terms of trade. Under pressure, there was real estate as a pack which sold off. Could you tie that in with higher interest rates? Perhaps, but the index was the top loser, all said and done. The energy stocks continue to sell off. Oil's coming off very sharply, doesn't help upstream, helps downstream, but for now, oil as a whole is down. And the IT services space, we had all that commentary from global bank CEOs saying, a warning about problems in 2023 in the US economy. They are some of the largest clients for IT services companies here. I mean, the indices lower today. What was down, and I'm going to start with not what was down the most in an absolute sense day on day, but what had the most influence in leading to that last hour sell-off. Reliance, HDFC and Infosys, these three contributed about half of the losses that we saw in the Nifty. Outside of that, NTPC, Tata Motors and Bajaj Finserv were some of the others. Broader markets, market breadth was negative, not hugely, but it was clearly negative. But I have to say, I went through, gainers and losers, even though numerically more losers than gainers, but momentum, volumes were still with what was up, not what was down. But in any case, Delta Corp, Jubilant Food and Oberoi, including Soba, were the 4 or 5 large volume-led losers that we had. But lots of gainers. Fertilizer stocks, not top-tier fertilizer names, but names like RCF, FACT, that is, fertilizers and chemicals, Travancore, Madras Fertilizer, among some of the big gainers. PSU banks continue their move, as has been the case for, a month, 2 months now. Union Bank, UCO Bank, and there were other names like Hikal, Siemens and BL Kashyap. And I'm only highlighting stuff with volumes here because I think that is what is important. US markets have been selling off for the last, 4 sessions now. They've been down 7 out of the last 8. We'll see if there is more momentum there because that's always important, the global stuff. And of course, here on the Nifty, you've got supports coming through around the 20-day moving average. That is still about 100 points away from where we closed yesterday. But I think if you're looking at downsides, let's hope that's essentially the point where the market halts and then reassesses trajectory. Rima.
Well, and in terms of what came out of the RBI monetary policy, on expected lines, a 35 basis points rate hike. They've lowered the GDP forecast for FY23. Earlier, it was 7%. Now they're penciling in a growth of 6.8%, so a cut of 20 basis points. They will be watching inflation very, very closely, which is why all the experts we spoke to indicated that perhaps the door is open, the window is open for another rate hike, which could be 25 basis points in the upcoming policy. So that was a bit of a hawkish stance, which worried the market. But on the occasion of our 23rd anniversary, the biggest and the brightest minds from Dalal Street joined in the celebrations. Nilesh Shah of Kotak Mahindra AMC policy says investors should look to increase allocation to equities in a falling market, says there are many opportunities and one should navigate their way through the stock market.
Asset allocation is key. It was important yesterday, it is important today, it will be important tomorrow. And in 2023, it's quite likely that the return differential between different asset classes, be it debt, be it equity, be it real estate, will narrow down significantly. So maintaining a proper balance between debt, equity, real estate will be critical. And if there is a correction in market, that will be the time to go long equity or increase allocation to equity. So stock market is also like coal mine. There are diamonds there, but you should know how to navigate the way. Clearly, savings and consumption both are necessary to drive economy.
Yeah.
So in all our messaging, we have always said that you should buy a bike and also buy the shares. Just don't buy the bike, just don't buy the shares. Because if you only buy shares and no one buys bike, then shares will not go up. So do the both things. Equilibrium, balance, allocation is necessary between savings and consumption. This is the game China is playing. If we have to compete with them, we still need to take our game a lot higher than what it is today. We have all the ingredients, but we need to ensure that the central government, state government and local government works together in delivering seamless delivery to the entrepreneurs.
From one fund manager to another, Samir Arora of Helios Capital expects mid-teen returns going forward and is bullish on the India story.
The only thing is we should not take the market performance for granted. Right now, what is happening is that, of course, we are bullish and generally India is doing well relatively and even absolutely. But every day we are ignoring everything else just on the basis that we have this domestic investor base which wants to start, and they have done well and they've held through these sort of bad phase of COVID and after that. But still, I think every day they just take it as if it is a given that in the end of the day, it's going to be up. Big picture is that everybody should invest in equities. Over time, equities outperform fixed income. Over time, equities outperform property for most of the investors, maybe not for developers. And therefore, there should be a reasonable allocation to equities, which Indians did not have for a long, long time. But we should still not sell it, treat it, that every day these guys have nothing else to do, so they will put money in equities. But big picture trend is true that has started 4 or 5 years ago. And as people see other people's success, as they see their neighbors putting in and doing well with their investments, over time this confidence grows and this continues.
All right. Another veteran that we spoke with was Shankar Sharma, who believes that India has weathered the inflation storm reasonably well, and also that 2023 will be better after a challenging year, which is already behind us.
We just pick and choose things that suit our point of view. And the point of view right now is that India is expensive. And I don't know on what metric they call it expensive. And therefore, India needs to underperform. And therefore, we will pick data points to suit that point of view, irrespective of whether the data makes sense or not. My view is simply that 2023 is going to be even better than 2020. I'm very bullish on real estate. I have bought a company called Pharma about, I think, 3 months back. Stock has done very well. I'm bullish because that again is a play on the real estate market. I've invested in a company called Kamdhenu, which is again it's making TNT bars, again a real estate play, or let's say overall construction play. And I invested in a company called Sumit Woods, which is again the thematic is the same, that they service basically northern suburbs of Mumbai. They haven't even got to Vashi, and yet they have so much business in redevelopment in just like 4 or 5 Mumbai suburbs, which are probably equal to, huge cities, in their own right, on a global basis.
Okay, those are some interesting names from Shankar Sharma. Madhu Khela of MK Ventures, meanwhile, is heeding some caution. He's asking investors not to get too carried away by rallies in the market. He also recommends buying meaningful dips, right? This is his opinion. Sunil Singhani of Abacus Asset Management. Of course, both Madhu and Sunil were long-time colleagues at Reliance Mutual Fund earlier. But Sunil, of course, now runs Abacus Asset Management, expects small and mid caps to give better returns than large caps into 2023. Listen in.
When we hear about this 10-year, 20-year bull run in India, and everything looks like a Ram Rajya, at that time we have to be little cautious that we should not take out our hat of risk. We must ensure that adequate allocation and intelligent allocation happens, and it is nature of markets that there might be correction and there will be correction. That is how markets have been. But I would say in that correction, you have to decisively buy, because the India growth story will continue.
If you look at the constitution of the Indian economy, Indian economy is driven by entrepreneurs. Right. And that means that we have a lot of budding entrepreneurs who want to, do something for their own self, for the businesses. And I think that is what mid-cap and small-cap is all about. It's all entrepreneur-driven businesses. And the good thing is, if you see, so many unique businesses are coming up. And so many new businesses we have not even thought about are getting conceptualized, and the spirit of entrepreneurship is there. And I think as long as the spirit of entrepreneurship is there, and as long as growth is there, the smaller and mid-sized companies will always grow faster than the large caps.
Well, you heard those views from all our market experts, but we'll take a quick break here. After the break, we get you views on the Indian economy and, of course, top industry voices that were at the NSE with us earlier today. Stay tuned. Welcome back. Well, we're getting you some of the best voices that we had with us on the channel through the course of the day. Today, of course, was also RBI's last policy of 2022. And we had some leading voices from the financial services space. K.K. Mistry, Vice Chairman and CEO at HDFC Limited, joined us. And he says that the RBI has left the door open for perhaps one more hike, which could be data dependent, fully data dependent, but it could be to the tune of between 20 and 25 basis points. We also had Amitabh Chaudhary of Axis Bank, who said that RBI's stance was more hawkish than expectations by the market. Listen in.
We were all expecting a 35 odd basis points increase in the repo rate. I remember in the interview after the last policy, my view was that we would see another 35 basis points rise. I think the governor has kept the door open for a possible small hike in the next policy, possible. That is perhaps will emanate out depending on the data that comes through. And the data will also depend to a great extent on global events, what Fed does and so many other things. But generally speaking, I think we've reached almost the peak of the interest rate cycle. So at most, I repeat, 20-25 basis points hike in rates in the next policy, but then there will, to my mind, be a clear stop thereafter.
Look at the wholesale deposits, the rates have already gone up by close to 300 basis points, but on the term deposit rates, the hikes have been lower. But as they get repriced with all these hikes on the reported rate side by the RBI, I think the cost of funds will keep going up, and it will not be that easy to continue to pass on this increase in cost of deposits on the lending side. So my view is that NIMs could come under pressure in the next couple of quarters for the industry. I think most of the industry players are clearly hinting at that also.
We also had the chance to speak with Sheshagiri Rao, a CFO of JSW Steel, to understand the latest demand and pricing trends in the industry. He says that while global demand for steel has fallen, Indian imports are also rising due to a healthy economy here. The globe is slowing down. The economy relatively is doing better, and that means more imports of steel into the country. Listen in.
The steel demand has come down. In line with the fall in the steel demand, the production also is getting adjusted. The fall in demand is close to 3 to 4% globally. In line with that, there is a fall in production also by 4%. But one divergence here is the fall in production is much steeper in the rest of the world compared to China. China is still producing a lot of steel. Actually, the prices in China has fallen much steeper than compared to other economies. So, but in the last few days, based on these economic developments, we are seeing a slight improvement in the steel prices in China. So in these circumstances, if we look at as far as India is concerned, it is a very good growth in steel demand in India.
That's steel, but moving away from steel to the pharmaceutical industry, we had the chance to speak with the management of Lupin. S. Ramesh was with us, And this is his view in terms of his hopes from the Indian generic industry serving the US, the state of innovation, and what lies ahead from the Indian pharma industry. Listen.
Healthcare in India has come a very long way, but having said that, we have actually been big into re-engineering. Products that so the paradigm was low-cost manufacture in India, low-cost R&D in India. We are now kind of transitioning into the innovation phase. The branded markets for potentially the emerging markets are still alive. But having said that, as we transition to the innovation space, you could expect Indian pharma also to kind of blossom and do extremely well in the long term.
Those are some top-notch voices from India, from stock markets gracing the occasion, the 23rd birthday at CNBC TV18. With that, we come to an end of this very special edition of CNBC TV18 at 23. Thank you for watching us today. Thank you for watching us all these years. And continue watching CNBC TV18 for more news and updates. Goodbye.